Hi, my name is Rachel Craigie with eXp Realty. In this particular one part of a five-part series on the nuts and bolts of how to add a legal second suite, we'll be focusing on financing. We'll be speaking with Lisa Denyer. She's a mortgage broker of 25 years, and she'll be talking about, just from a very basic level, what types of financing is available based on the type of ownership. So whether you're a real estate investor, whether you're someone who's looking to supplement your income, or whether you're someone who's a pensioner looking to supplement your pension. If you have any questions afterwards, please feel free to reach out and we'll be sure to put you in touch. And enjoy. Take care. Bye for now.
Okay, great. Hi, everyone. Thanks for joining us. Mine will be, like as Ken started, there's so many variables, there's so much content. So I have just kept it rather a little short but sweet, just as an overview, because when it comes to financing, there are so many different scenarios. And so I just wanted to give a high level, but what I'd like to add is that if you are interested in discussing further, because not only does it matter so much about what you're looking to do, but how do you qualify, right? What lenders are we talking about? What is your situation? So my information will follow and it's part of the presentation. So please just contact me after. We can arrange a time to chat about your specific goals and situations. So I focus the presentation on secondary suites. So whether you're an existing homeowner, maybe I'll just continue on this way. There we go. So secondary suites and also the laneway housing. So one scenario is your primary residence. You are living in your home, and you perhaps might have some space that you want to take advantage of, renovate your basement to create a legal basement suite. There are folks that are looking to actually renovate the main level and move into the basement. Typically an aging population, their needs have changed and they're looking to supplement their income. And then of course, with your primary residence, it would be the construction of a laneway home, which could be the garden shed. I'll just say laneway home for all separate dwellings. So those are some high level options for where you're currently living now. And then of course we have buyers that are looking to purchase. So whether they're investors or it is someone looking to purchase a home, but I have a lot of clients that are specifically looking to purchase a home that has a basement suite or main level suite to supplement the income. And so these are also some ideas. Or perhaps buying a home now because we're seeing more and more of a variety of different questions and needs, considering the housing market today, perhaps a lot that can support a laneway house based on lot size and zoning. So they're going in with those eyes. Also for a purchase, it could be a rental property. If it's an investor, or sometimes I've helped some first-time home buyers looking to buy their first home, but they're looking for a duplex and or a home that they can renovate or bring that basement up to code right off the top. So with laneway housing, I'm just going to move one second. My face is over half of my, just some points to consider. So with laneway housing, you could be renovating an existing dwelling or a new construction. So adding an apartment or a unit on top of an existing garage, as an example. As Ken mentioned, this is just a high-level overview of things to consider. You need to understand the zoning bylaws where you're looking to do this. I also believe that if this is something, that you are interested in doing, that before you get the feet on the street looking to understand how your application is going to look, what kind of lender are we? Let's get your application and your income and everything up to date to make sure you can service this new purchase or renovation or the construction of a laneway house. So we need permits and plans and everything upfront for financing. And as Ken mentioned too, there's specific building requirements that will apply. With the laneway housing, it's typical, it can be a construction mortgage. Again, it's going to depend on many different variables. Do you have a lot of equity in your home and you're doing a refinance to create this new dwelling, or are you?
If I can just kind of interject for a second,
Yeah.
just because there are different types of people and situations. I mean, we have people who are, you know what, they're retired, they're struggling and wondering how they're going to accommodate a pension in this rising inflation. You know, those are the types of people. For people who don't have an income, what would they be looking at potentially to add another unit, whether it be a laneway unit or a basement suite?
Exactly.
What would you recommend?
Oh, well, I mean, if they're looking, there's so many different options, but you mean if they're looking to make a purchase?
Or just even just to get the investment, because if someone's retired, they don't have an active income, but they may not be able to continue to stay in their home. What would they be looking at?
Well, and that'll actually, as when I go into the different lender options. So,
Sorry.
Oh no, that's okay. But that's a great question. Anyone can jump in anytime. So, you know, if someone, and that's a great, and that's all about understanding the options ahead of time, because if you are typically, when we have a cash flow issue, it's the aging population that's already on a pension. And unfortunately, it's really difficult to qualify for financing when you're already on a pension, depending on what that pension looks like. But as we age, of course, our income is decreasing. And today, you know, to qualify for financing, it's a little tougher than before for various reasons. So that gets into the CHIP home equity bank mortgages as an example, a reverse mortgage, and that's based on, that's one option. So there's a lot of options. There also are lenders that will, depending on the amount of equity you have, they can look at it based on just a 50% equity to home value. So a lot of different things, but we are seeing more clients that want to take advantage of the reverse mortgage, but there's a lot of criteria with that. You need to be of a certain age, but income is not a factor in that scenario. So that's been very popular too. But again, it has to be the right fit. And if you're not a senior pensioner, you may not qualify for the amount you're looking for. So it's definitely an option. So some considerations when you are looking would be, you know, how many dwellings are on the lot right now? So lenders have different policies with, is there one building or if there's two? So how many dwellings are on the property right now? And if you are looking to, you know, make a purchase and have a basement suite, you know, who's that tenant going to be? Do you have a lease agreement in place? Do you have someone in mind? Most times people don't. They want to go in and they want to renovate a basement suite, you know, and then put it on the market once it's ready to show, and it could get top dollar, obviously, from a tenant. And so lenders will have different guidelines around that as well. And so on that note, you know, what is that current market rent in that area for that particular property, so that you can also do your cash flow planning and budgeting. If you are creating a basement suite, when I say basement, it could be 1 or 2 units. I'll just use a more in-house suite and then separate dwelling. But some considerations would be, as Ken was mentioning, you've got like an egress window and a separate door entrance. So, you know, are there any structural changes that are needed with this renovation to get the legal basement suite? Because that'll make a really big difference between, is this a structural renovation or not? So non-structural could be, you know, you have the proper window and door and you're going to install a bathroom and a kitchen and things like that. So have to ensure that everything is going to meet code. And so really reviewing, you know, what is the considerations, what is the cost of construction of the work to bring it to code if you're looking to renovate a basement. So as we were saying, some financing options. So depending on where you fit, depending on your situation, what your income is, how much you're looking to borrow, what the equity is in your home. There's a lot of things to consider. So first, obviously is, perhaps with a prime lender, if you are looking to renovate and create a basement suite, well, how much equity do you have right now in your house? There's some different options. One can be refinancing your mortgage. Another could be taking out a line of credit. And then there's some strategies around that, temporary.
I just asked about, what
Yeah.
about if it's a short-term rental, like maybe an Airbnb?
Do you mean creating a short-term, like creating the house to be an Airbnb?
Stuart, did you want to elaborate on that? Stuart
Well-
McNeil had that question.
Oh, what I can say though, in terms of a financing standpoint, is lenders do not like Airbnbs. So
Yeah,
I
sorry about that. I
That-
was writing that. I don't know what happened. It lost most of my message, and that was the last of my message. But that's the question. Are lenders concerned if you're building for a long-term rental tenant as opposed to building for a short-term rental like Airbnb?
So with financing, they would want a long-term rental, not an Airbnb type, or also not a student housing type of property. There are lenders for that, but you would be going into a higher rate, private lending option. So that would be more of a cash purchase, to be honest. The nature of and I actually had someone recently buy a condo that was a short-term rental, and there wasn't a lender that would touch it. So they want the nature of it to be long-term rental, just a standard rental. But to be honest, when you are applying for financing, so most times there's not a lease agreement, so they will have an appraisal done to determine the market rent. And so unless you're not buying something that's already existing as a Airbnb, I don't think this was in a ski lodge. So that's a different type of property that's listed as a short-term rental in a typically that's listed in recreational, like
Like a leisure property.
vacation. Yeah, that type of property. But if it's your house and you want to have it as an Airbnb, to be honest, a lender wouldn't know. I mean, that's just something you would do after the fact. Any kind of rental income to qualify would be based on an appraisal and an opinion of the rent you would receive. So you would not be able to buy something already listed as a short-term rental, which would be more like a vacation home. It would be very difficult to finance. So I'm not aware anyways of in the broker channel of a lender that will, and I had that issue recently. Does that help? Does that answer your question?
Yeah, it does. I just, it was interesting. I had a friend buy a cottage and they were very concerned, but they converted it to an Airbnb rental.
Mm.
They weren't renting it until they had acquired the financing and completed the renovations. So
And
kind of snuck through, I guess.
And cottage country is an entire other kind of area that's its own separate category as well. I didn't really include that in this, but that definitely has a lot of other considerations if someone is buying in cottage country. So, and there's definitely some rules around that. So the financing options are, again, looking at the existing equity in your home, which could be a refinance, taking out a line of credit, construction mortgages, so which is very typical for then the laneway financing. Essentially, if you don't have the funds yourself or can't refinance enough money to construct the new dwelling, then you can look at a construction mortgage. There's also a lot of times investors will work with private lenders, so I'll work with a private lender on behalf of them. It's expensive, but it's short term and they don't jump through hoops. So it's essentially a cost of doing business if they want to have it, in and out and do a takeout. So there's a lot of strategies. Rachel, as you were mentioning, the CHIP reverse mortgage, if applicable, with the age.
I just have one more question for an investor.
Yeah.
What about the mortgage corp? I know I've come across one where they're now at this time, this is when mortgage interest rates were really low. I'm talking maybe a year or two ago where they were saying a 7.5% mortgage. Obviously that would be different today. do you foresee anybody using mortgage corps for maybe for actual like long-term investing versus just flipping?
So the lender market looks like we have your prime lenders, which would be
Mhm.
banks, right? Credit unions. We have alternate lending and we have
Mhm.
private lending. So mortgage corp or mortgage or mix are essentially like that third tier.
Yeah.
And so they just kind of do this like one of these cut checks, and you pay for that flexibility. So it would not be necessarily a very long-term strategy. In fact, when I'm working with, and so the rates are always higher because they essentially base the entire approval on the property. They just look at the property and how much cash is going in, and they want to know what that exit plan is. So they have to, I did actually set one up recently, not for this type of purpose, but someone that needed a private mortgage, just quick. And he's going to be listing in 1 to 2 years. So he was okay. Also, it's an option if people have an existing first mortgage, they don't want to touch, they have a great rate that was not too long ago. It's a way to set one up in second without touching the first. But you have to have an exit plan. So to answer, it wouldn't be a long-term strategy. There are setup fees, and the rates, if it's in second position, most likely 12%. If it's in first position, probably 9.5%. So
Okay.
when regular rates are now 5.25%. So it's really, I find, most popular with investors that might already have a sizable portfolio, and they really just factor this into the cost of doing business. They want to get a property. They don't want financing. They already have a relationship now with their broker and private lender. So they can just go in, firm, renovate, and then figure out the takeout strategy. So that's the strategy you have to work out ahead of time. But certainly clients will work with private lenders that are not investors or, experienced investors. It could, it happens all the time. And as long as we know the exit strategy and it makes sense, then it's a good plan. So we just have to factor in all the costs and the reasons ahead of time. So
just quick question. Now, if a client was looking for a home where it has a basement apartment or can be with some modifications, would the lender take into account the amount of rent that they will be getting when it comes to doing the qualification for the mortgage?
So that's a great question. So I understand. Are you saying the basement apartment, there is a basement apartment, but no tenant, right? They're buying it's vacant.
Correct.
So, and every answer is some do and some don't. And that's why it's really important to not to plug, but work with a broker, because you'll go to every bank and credit union. So some will, what they will do is they'll have an appraisal done with market rent. So an opinion of the market rent. So if it's say $1,500, if they will use that, an appraisal is done also to confirm the value and condition of the house with a market rent for the new unit in the basement. And then on the application, all lenders will use 50% of that. Some have a spreadsheet as well that they use, and that's impossible to know what that percentage, but rule of thumb is about 50% of that rent would be then added to help qualify for the purchase. But then there are some lenders that say, if you don't have a tenant, then we're not using it. Or if you're buying a house, the bigger caveat is if you're buying a property and that basement unit's not yet been converted to a basement unit, a lot of lenders will not factor in any rent, but there are some that will.
Okay, thank you.
Yeah, no problem. So, and that's honestly, half the time when I'm working with clients, I am going to all of my lender managers and contacts and these policies also are always changing. So you have to know who's doing what based on what the clients need. So yes, if it's that lender, that will, and 50% of the income.
I have a question, Lisa.
Yeah.
Just today, I heard that the mortgage rules were changing in terms of A lenders, no longer accepting rental income in terms of qualifications. Have you heard of this yet?
Not at all. But that's, no, I mean, rental, I would need more details because if you have an investment property or you have like a duplex, for instance, they definitely accept rental income if it's from a non-family member. So some will use 50% and some will have a spreadsheet. Like some banks, we go through an entire spreadsheet to calculate if it's a surplus or deficit. But
yeah, one of the mortgage agents that I follow on Instagram was just posting about these changes to the regulations that are coming, where A lenders won't be accepting across the board going forward.
well, I'm a little behind on the news today, I'll be honest, so I'll check that out. And it's not something that has come across my email, which I would think it would from at least my brokerage. So it's about rental income?
Yeah, it's the anticipation, obviously, of the announcement of all the tightening of the qualifications within the mortgage industry that's coming this year. But that's supposed to be one of the main things that's going to change. A lenders are taking rental income off the table when it comes to qualification. Now, there's always B lenders, right?
Oh, yeah. I'll have a look at that because I
Yeah.
have not heard about that. But to be honest, it's been a full day, so I haven't even, I mean, I'm surprised that I didn't get that in an email, but I'm curious. The policies are already strict. I mean, what they should be writing about is just, you know, getting rid of the stress test when we're qualifying people at 7.5%. That's really, you know, it's already a tight market. The rules are already really strict. Having to find, but I'll look into that. But there is always, I can't imagine this being across the board, all lenders, because quite often banks will have their own policies. Pardon? Yeah, but that covers a wide range. So I'll look into that. But when it comes to lender options, there is always that, if we call it, say, ABC. So A being your banks, trust companies, and credit unions. They're federally or provincially regulated. So a lot of guidelines and rules to follow. A lot of my self-employed clients don't fit in A, depending on what income they're declaring. And that's why I think it's important before, you know, they're signing contracts with CAN, that they make sure that they know what kind of what their financing looks like. So as you were mentioning in the B world, if we call it B, it's alternative lending. Slightly higher rates, and there are some setup fees, but it's nothing like C, which is that private lending. Again, think of it like checks being cut like this, but and they have more flexibility, the alternate lending. So certainly they will have more options and to work with, and definitely around income and credit scores and things like that. And if the prime market's not doing something, then typically they have that flexibility. So
yeah, I always use B lending or even private for my income properties myself, just because, you know, I'm self-employed.
Exactly. And the hoops that people have to jump through. And especially if you're an investor and you're buying a rental and flipping, you know, it's almost inevitable that you need a good private lender. Of course, a good broker and a good private lender. And because there's a wide range of private lending. And Rachel, to answer your question, the mortgage corp or the mix mortgage, it's all the same type of thing. So one is, it could be anywhere from, you know, Tom Jones lending money, or the companies I work with are registered with our regulatory board. So it's more of a group of investors, but it can range from independent to large mortgage corporations or investment corporations. So there's lots, but essentially they're all doing the same thing. It's just that, you know, less hoops. They care very much about the appraisal, and they'll really work though with buyers. They'll really work, especially I've also done private for construction, because you have to know if you're going to go through the traditional channels, the amount of hoops and paperwork you will go through is extensive. So, but you're going to pay for fast money as well. So it has to be. But you have to just, I really believe in just educating clients on their options, and then they decide. So we've got this path and we've got this path. And And then some, it's just, well, we just have this path. It depends on a lot of different factors. So some financing options to consider with a purchase. Of course, we've got, like I said, traditional lenders, private lenders, alternative. Depending on the down payment, you may be able to add some of the costs to the purchase or to your mortgage, essentially. That's a purchase plus improvement. Very complicated in a sense, so I won't go too much into it, but if it just depends if you meet the guidelines. But if it's a small amount and it's non-structural, right?
Yeah.
Then that's also an option. So with every client, really, it's that consultation. It starts at, okay, tell me about yourself. Tell me about your goals and also plans. Is this short-term, long-term? What is your employment? What does your income look like? What is the down payment? And just kind of whittling it like this to get to an understanding of, hopefully they have several options to consider.
I have a quick question, because I did work with clients that were first-time home buyers, and at that time, and also, with everything going on with COVID, they did ease up a little bit on the lending, where they were able to get a package deal and they were able to actually borrow their renovation cost. And they had a promotion. I guess it was CIBC at the time. I don't think they still have it. Are there any companies that do have that for first-time home buyers, where they are offering the opportunity to, include their renovation cost? They're offering that even maybe specifically to first-time home buyers?
Well,
Are
and
you aware?
sometimes banks will put a spin on it by saying like it's a renovation, it's a promotion, but it really just sounds like what's available to everyone, to be honest, unless it was a specific cashback promotion. And that's what's called the purchase plus improvement. So that's available if you're putting down 20% and then it's managed by the bank, let's say, or if you're buying a home with, 5 to 20%, say 5%, 10%, then it's regulated by the insurer. So we have 3 in Canada, CMHC, which is most familiar, that's Crown Corporation. And we have, used to be Genworth, now it's called Sagen, and Canada Guarantee. So typically it's about $40,000. So if you're doing a renovation and you want to add 40,000 or up to 40,000, then you can add that to your mortgage. So there's some guidelines around it, and it can't be like you've got to blow out the exterior wall to put a door. That won't apply. They want all the quotes and details up front. But certainly also, let's say you're buying a property and that basement unit is tired, it has green carpet and a, crummy kitchen. I can't think of that kind of wood, but just it's bad. And you want to do more of an aesthetic renovation, right? You want to put in a new bathroom, you want to change that kitchen, put some nice flooring, so you get top dollar and top tenant quality as well. Then that's what it's for. It's really ideal. And those clients, though, when they're shopping for those homes, they need to know this and get quotes quickly. But we can help them understand that program if that's what they're interested in doing. Because I think it starts with the client that says, I just want to do like an easy update. I want something existing. We want to spruce it up, make it look pretty, make it look current. And then we can plan for that accordingly. So this is a good idea. And this is what you need, not someone that is buying, let's say, a house that does not have that in the basement that requires any kind of structural work, then that program wouldn't apply. But if it's putting up like a drywall and creating, then there are those options. So I think probably CIBC was spinning it that way. I don't really know those details of that program. They're not in the broker channel, but there is that program. And also it's not just for first-time home buyers. It would be for anybody that is.
They're not offering it anymore, because I did look into it. Yeah.
Well, there is a program that could help. So, which is good news. And there's always different things coming up. So, so for investors, definitely there's a lot of different options. If you're looking to buy a new investment property, if you have already a portfolio of properties, we help clients with refinancing to get equity out for the down payment on the next property. And then that really does take a long-term planning approach to understand, is it a buy and hold? Is it a quick sale? Are you okay with breaking even? Or do you want to be cash flow positive? Because there's a lot of tax implications with this as well. Some investors, want to live in one unit and, have a lower unit renovated. And again, we have all the lenders available. So A, B, C, or prime alternate lenders, and the short-term private financing, which is most common with investors. And after they've done that a couple times, actually, it's funny when someone has, if they say, or they know by now, but if they had, let's say, 6 properties, they know that although they thought the banks would love them, it's the opposite. They actually have to unfortunately go, they're like, I have 6 investment properties, which that's amazing because good for you. And what a success, but it's harder and harder then with the risk appetite with the bank to get financing. So it's a win-win, but when it comes to, especially flippers, so banks don't like flippers. They could typically buy a couple and flip within a year, but they really keep an eye out for that. They're not in that business to do the short-term mortgage. So I always say, well, you can get away with a couple and different lenders, and then we have to look for other options. So I always start top down. Let's see what's the best, and then go from there. But lots of options. And then some of the reasons, why are we seeing, we're seeing more and more questions and more people coming now looking for creative ways to solve, a problem or create additional income. So for instance, the granny suite or the in-law suite, right? So people want to have, grandparents are no longer necessarily buying a separate house or downsizing to a bungalow. They can't find it. It's too expensive. They don't qualify. They just want to be close to their kids. So a lot of people are, creating that in-law suite. Adult children coming home to take care of parents for whatever reason, for healthcare. Perhaps one parent's passed away. There's many different reasons why that situation will change. Also, an aging population. So looking to downsize, but also having supplemental income because they're on a pension. So that's a great way to have, with a tenant or that suite in the basement. Also, we're seeing now parents asking about creating that suite, and I'm seeing it more and more where they have a separate suite for their adult children that they realize aren't leaving anytime soon. And they want them to have privacy. I know a lot of newlyweds living with their parents, and they want to create just like a private suite for them. And because they, it's the prices have gone up, and everyone's just trying to get that down payment or get qualified. So whether it's short-term or long-term, a lot of seniors do not want to move to a retirement home. It's very expensive. It actually would be very detrimental to their health, or if they're really fixed on staying home, they really should. But there's ways, we have to find ways to make that work. So I felt like I had, and then other reasons, some people, quite honestly, have a lot of space that's not used. Like they have the full basement not used. They have, a separate dwelling and, perhaps already an apartment that could be utilized. So there are a lot of different reasons like that. And also seniors looking for companionship as well. That's a really big movement where they're lonely and they would like to have a tenant and someone, but with the intent that they can help maintain the house. And I think it's wonderful where they have company, they have care to take care of what needs to be done around the house. Some seniors will have someone that will cook for them. I mean, there's a lot of unique arrangements, and it's just time to be creative. So this is just that was a very general high level overview, because I can't stress enough that there's so much to go over to see what is the best solution for you based on, employment, just overall application details, where you're looking to buy, what is your budget, based on, the mortgage, are you going to be cash flow positive, negative? Also, what kind of landlord, if you're going to be, have rental suites, I think what's really important is, what kind of landlord are you going to be? Where's your target market? Where do you want to be a landlord? What experience do you have? Do you want to hire a property manager, or do you want to be hands-on? And that's going to determine where you go. But from a financing standpoint, there's lots to look at to determine what your financing options are.
I do have a quick question for you with respect to where you do choose to be a landlord. I know when I was first started my business, when I was looking to flip houses, I had a hard time even getting money from second tier or third tier lenders, because I was looking in the north end of Hamilton, and because of the proximity to the industrial, I had a hard time getting a mortgage just to do that. Do you still find that, or do you find that's changing?
So what happens is that a lot of lenders have really outdated policies, and they have hard stops where they'll say, well, north of Barton, from here to here. I'm always fighting lenders on this because they don't realize all the great pockets. Let's say the beach strip, right? That's north end. So they have outdated policies that will say that's like an area that we don't lend for various reasons, and they're outdated. They're always being updated though. So I certainly have come across that, but that's where I know, and that's where I go to credit unions. I know exactly who will lend. I have a client that bought a house beside a tire factory. Nobody would touch, this application. And, it was very strong in all other ways. It was a perfect home for her. She loved it, didn't care about the tires. So I found a local credit union because I knew that credit unions have to support the community. So it's just knowing, where to go, but certainly it's outdated policies. They'll always be updated and changing because of areas being gentrified. And I mean, it's just stale dated policies. So, but yes, there are definitely some areas. Also, just like if you're buying a property, you could put 20% down, but if you're going to buy in Simcoe, it could be more than 20%. So those are other things.
Sorry, I don't mean to, we're running late, and I know that we still have one more person to, did you have anything else that you wanted to add? That was really, really great, Lisa. Thank you so much.
I can't believe how I thought I was going to be really quick. Oh, here to help. Let me know. There I am.